And good evening again, everybody. This is Michael Filighera from logicalsignals.com and tradershelpingtraders.com. And tonight I am doing what I'm going to be calling anatomy of a trade. And I'm going to go more in depth on some trading that took place today and what it caused and how I personally got thrown off by it. Because several of the techniques that I use to trade those types of moves early in the morning just switched and worked against me so quickly that it throws confusion, throws you off track. And the next thing you know, you're scampering for cover. First, I'm going to drop down to the 15-minute chart and see if I get, no, I'm going down at least to the 5. Actually, I'm going to go down to the 2-minute chart because that's really, I think, where we can see it. And I am looking at right there. And I'm not going to go out that far so we don't have to see it because this is it right here. And then I can change from there. So as we come in this morning, the market's kind of fluttering around, deciding should it go up, should it go down. As of the Elliott count and everything that I talked about yesterday, I thought we could have some additional upside, but it would still be considered a wave 2. And that we should drop off the cliff, so to speak, and start dropping in a 3 of 3. So I really was looking for a stronger possibility that we would get acceleration. So the first move out of the box, here's the opening. First move out of the box, this is 2 minutes. So in the first 2 minutes, the market jumps from 14,505, so just remember the 14,000, to 560. So it goes $55 in 2 minutes. And normally I'm not going to jump into that one right away. But as it got up here and came back down, I thought, okay, I'll buy it, which I did. And then it flips to the next bar. And actually it was right here, flips to the next bar. I buy it. It continues to drop. I buy it again, thinking I can take it down to the 50% mark. And it kept going. So I get out. And then when it comes back, I goes over to the next bar and it's like, okay, we should have followed through to the downside. And I sell it. And it goes all the way up. And I'm like, okay, I'll buy it. And now we should have followed through. So I'm out and I buy it. And here doesn't go, and then it goes and goes and goes. So on this one, I'm like, okay, I'll buy it. I'll buy it down a little bit more. I'll buy it down a little bit more, 50% point. That's my gear, but it's going so fast and you don't get out to here. Now it's breaking the 4 and causing the balance. It was the first 2, 4, 6, 8 minutes of the trading day. And if you're trading a small account and you're even trading a 1 line, these were between $500 and $1,200 hits, all within a minute. And combined, the whole bar was 2 minutes. And you're getting pushed and shoved around that quickly. And what do? Sometimes you get blown out. You hit thresholds. You hit self-imposed thresholds. I trade with a self-imposed threshold. Turn the computer off. Doesn't matter. And sometimes that's the best thing that can happen to you. But if you're working on attempting to get funding, you're working what some people call a combine, you're working for that additional funding, then you need to be able to keep a tight rein on your risk parameters. You need to keep a tight rein on how and why you're going to trade. Now, this happens so quickly because often in the morning, you'll get the follow through you're looking for. We did eventually get it, and then we got it again, going up until the 3rd hour of the day. After the, so now it's just going to flip and fly. Sorry. Let's move back quietly. We did get the moves. And those you want to be long. I mean, even these, you could work them, but the bias was up. Had some nice little cells in it, but the bias was up. So even if you thought, okay, I'm going to get out, it was a small hit. You make it back, small hit, you make it back. But these, they happened so quickly and so abruptly and so aggressively, both directions, that it threw me personally off track. And I have a lot of experience trading. So what I want to talk about as well is like, so what do you do? One, you need to make a decision, step aside, step away from the mouse and let it be, and let it settle out to when what you look for to trade, like the size of the bar, the follow through that usually would be expected, not the reversals, et cetera, et cetera. This was so strong in the first minute to 2 minutes of the market that follow through was almost a given. Well, the next bar told you no, but the third bar was, yep, we're there. But it had to go from here. And, you know, that's the range of the bar. Yes, it ends up closing up, but it zipped down. So you kept thinking it's going to go up, and it goes down first, then it goes up, you know, but you got taken out down here. You had to get out. So suddenly, I'm serious that you're down $400 to $1,200. How many times can you do that before the account goes, the account closes? So you, even if you're trading with $50,000 or $100,000, you really can't be backing yourself into trades where you're dropping 3,000, 4,000. That's too much to be risking on each trade. So what do? You have to be very disciplined. You have to be able to say no. You even if you're using that, I don't keep a trade against me longer than a bar, that bar was $1,600 or $2,000. Boom, you're working for an account, you're out. So as trading with a smaller account, we have to keep tighter parameters than the market's going to keep. The market will expose your vulnerabilities and then take advantage of it, all without knowing. But the taking advantage of it is basically holding on to it instead of exercising the strict discipline that's going to be needed in order to make it all work. And that's part of today's little discussion. We still can trust the moving averages. We still can trust the bars. But there will always be anomalies. There will always be days that you could toss an anomaly. These are the days when you, if you recognize it quick, God bless you, because you're going to want to stand aside. If you don't recognize it, realize that you better, as your P&L tells you, to step aside. It's not has anything to say about your ability to trade it. That was pretty impossible to trade. Again, with a small account. A larger account, you just held on, you rolled with it. Small account can't take $5,000, $6,000, $7,000. You got a big enough account, you ride it, it comes back, you sell it, or you buy it. Either side, whatever you're playing. But we don't have, or people with a smaller account, you don't have that same luxury. We don't have that same luxury. And so because I'm trying to help people attain funding and to trade successfully with smaller accounts in this big ass future. It will strip you and let you run the streets looking for cover. And it's not that it's choosing you. It's just the nature of this market. When things need to get done and it's on a larger size, it's going to go to the orders. And what that means is like you have, I don't know, $550 billion or $50 million of NASDAQ to buy. You're going to push it because think about one contract and what's the value of that contract. And now you're going to figure out how many contracts somebody may or may not need. And they've already got the money moving. Today was likely just a continuation of yesterday where it's the new 401k. It's money coming into the market. And that produces these types of things. Now, how do I fit that into what I'm looking for under Elliott Wave, which also goes with what I was talking about? Because as this happens, in my mind, I'm trying to determine, okay, are we going to go up? Are we really going to make this a larger run as I spoke about yesterday? I need to go higher than 30. Just taking a look at the 30-minute chart. When it starts to break above the 50-day moving average, which it did right away. So again, thrown off. It's like, oh, you just broke above the 50. We're going to gap. So it starts to gap. But then I'm going to go back to that 2-minute chart. It breaks above the hourly 50, the 30-minute 50, right there. Same place. It breaks above the 2-minute 50 on the first trade. Okay. So, and actually broke the 200, broke the 50, broke the 20. And then just kept going. So it's like, okay, we're going up. Everything's telling me we're going up. Boom. All right, just a pullback. Keep buying it. Boom. All right, get out. Now sell it because it's going to have follow through. No. It's going to go up. Then, okay, buy it. It should have follow through. No. We're going to go down. In fact, we're going all the way down to below the opening. We're going to create a new little session low. Then, no, we're going to go up. Boom, 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 boom. So, with the terms of account, when you start to get breaks, you have to trade what's in front of you and realize what the moving averages. This made it very confusing. So you have to be able to get your wits about you when that happens so that you can just turn it and roll with the punches, so to speak. Coming back from losses, not impossible, but you have to control the amount. Don't sit for $2,000 or $2,500 or $3,000. It's not as easy as to make it back because you don't have a whole lot more room to the downside to keep on losing before you're going to have to call it a day. These are things you're going to have to set for yourselves. Number one, don't blow out your account. Do not blow out account, period. Not healthy. Defeating. Don't do it. Set your standards, set your loss limit. And if it means you got to stop trading, understand that's for your own good. It's not for the market's good, it's for your own good, because if you're going to become emotional, you're going to lose more because you need to remain in the now. You need to remain focused. You need to remain using the strategies that you know, and they do work. An anomaly, they are going to happen. Control your P&L, not the anomaly. I don't have control over the anomaly. I do have control over my P&L. I can stop. I can stand aside. I can wait until the market clarifies itself and I can see the move and can again begin to trade the strategies that I know work against the moving averages that I know work. Now I can get into it. And if I'm taking a small hit, maybe it'll be 20 or 100 bucks, easy to make back. Control your losses. Don't let it go thinking, oh, it's got to come back. Oh, it's got to come back. It's because suddenly you're now not in the now. If you're saying, oh, it'll come back, it's going to come back, it's going to come back. Look, here come the buyers, here come the buyers. And they're immediately swamped by this. All kinds of things go through your mind. Can't let it happen. You got to stay focused. And these are the important things. The balance of the day presented its challenges, but you could have easily made money. But you've got to be in the position to be able to get past that first 8 minutes. 8 minutes. And that's all it took to take care of a whole lot of people. And if you don't have the ability to just turn it around and come back clear-headed, you're going to get into more trouble. So, anatomy of a trade. These are anomalies. the reading the price action, follow through, elephant bars, whatever you want to call these, they truly do often have follow through, because that's where the Elliott comes in. When this Elliott got broken, but then it didn't, but then it did, but then it didn't, it was difficult to see that it was forming an impulse wave and or a C wave. And if I take this out, even put it on, C wave actually. If you take it out and look at it, it's on the other update. So this is the anatomy of the trade. I really do feel that it's very, very important to keep a clear head. If something gets in the way, it's up to us as individual traders to only take care of ourselves, of only to mind our stuff. And if we're operating from a position where you're suddenly going like, crap, damn, and you can feel your teeth, you're gritting your teeth, you feel the tension in your shoulders. This is real stuff. Pay attention. Don't continue to feed it. Stop it so that you can get back to focusing, to being right there, not being impulsive. That's not helpful. Okay, anatomy of a trade. This is where I'm going to leave it. Thanks for your attention. Thanks for listening.